So we've already spoken about events 1 to 5 in the Wyckoff theory and exactly how to trade them and how we go through each of them, either to confirm the next stage of a developing distribution or accumulation or to invalidate it. Now we move on to the 6th and 7th events, which are the breakout and the confirmation. These are the most important events within a Wyckoff schematic. This is where it really becomes clear that what preceded it was either accumulation or distribution and gives you the highest probability entry on a trade in the new trend. So first, we're going to see a breakout. So on the screen, for both accumulation and distribution, the breakout phase of the event is circled. Green for bullish in the accumulation, red for bearish in the distribution. What does this represent? Okay, so the breakout represents another change of control. So in an accumulation, the control moves from being in balance to being in bull's hands. In distribution, the control moves from being in balance to in bear's hands. In accumulation, this is where we see a show of strength, or in distribution, it's where we see a show of weakness. Wyckoff theory hinges on these two changes of control. The whole point, this is very important, the whole point of price action analysis is to identify when trends begin and when they end. That's all we're trying to do. But where most people get it wrong, and where maybe many people watching this have gotten it wrong, because I certainly did when I first started trading, is they think that when a trend ends, it means that we're going to trend in the opposite direction. As a new trader, you think that after an uptrend, we go into a downtrend. Or after a downtrend, we go into an uptrend. Therefore, you try and take a trade in the other direction, and you expect it to move strongly in that direction. That's not the case. Most markets tend to move from trend to range to trend. And so that's why it's super important to highlight that there are two key turning points in a Wyckoff schematic. The first one we talked about in previous lessons. That's where the trend ends and we go into a range. That's phase A. In phase A of Wyckoff, the previous trend ends, downtrend or uptrend, and we go into range. Think of those as change of control. So the change of control in the accumulation here. In phase A, it came down in a downtrend and we had change of control from bears into balance, meaning nobody has control. In a distribution, we have strong bullish control and it changes into balance. So that's your first change of control. Everything you do after that is to try and confirm the next change of control. That can either be from balance into bears or from balance into bulls. And remember, it doesn't always have to go like the schematics on the screen. It can go into continuation, where the bears are in control here, we go into balance, and then it goes down and the bears continue in control. Or the bulls are in control, we go into balance, and the bulls continue to be in control. That can also happen too. It's not about always being a reversal, but it's about knowing where the change of control happens from balance to either bulls or bears. So why does it happen? Essentially, we have been in a range for long enough, and new information comes into the market that reprices it. Or simply trader positioning pushes the market into an inefficient state where buyers or sellers get overwhelmed. You can see this most commonly in the terms oversold and overbought. So here, as we enter the accumulation range, it progressively gets more and more oversold. It's been sold all the way down. It goes into a sideways range. They try to sell more, it rejects. They try to sell more, it rejects. At that point, essentially the sellers give up and they're overwhelmed by the buyers. And that's why it goes up. Same thing in reverse for distribution. Think of the Titanic analogy I used before. At the point where we move into the breakout phase, it is just too big to be stopped. There's too much pressure on either the bull or the bear side to stop the thing from moving. Remember how price always moves. It moves through the path of least resistance. So if price was acting like a jet ski here, turning frequently, testing high, testing low, once it reaches into the 6th event, the breakout, it's like the Titanic. It builds up momentum and it's impossible to stop it. It would take way too much effort to stop it, and we know the price moves through the path of least resistance. So what are the key features? Key features of a breakout, which happens at this point up here. Number one, there is no immediate re-entry into the range. So it breaks out and it closes. So whatever time frame you're trading on, it breaks out and you have a candle close on that same time frame. That constitutes no immediate re-entry to range. You also can have volume confluence, meaning you have high volume on the breakout, which then is accompanied by a close. A high volume breakout with a close are signs of a breakout, a valid breakout. And the breakout deviates more than 20% of the range you just left. You know from previous lessons, specifically we were talking about the reversals, and there was a reversal called the sweep or the trap. And a valid sweep or trap, meaning it goes above or below the high or low, has to deviate less than 20%. Now, so if that means it's a valid sweep or a trap and it goes back into range, then surely the opposite will be an indication of a valid breakout. So if price pushes a 30% deviation above the range high or below the range low, that's another sign of a valid breakout. What are the actions you take here? Well, in reality, this is generally not a trading opportunity. The breakout itself is not something you want to buy on an accumulation or sell on a distribution, because we wait for event number 7, the confirmation, to actually place our trade. Now, if you are a scalper or a day trader, and let's say this accumulation or distribution is happening on a daily chart, so if it's a high time frame structure and you trade on low time frames, you can trade them, but very quick entries and very quick exits. But if you're trading the structure itself, you don't buy the breakout in either side. You wait for the retest, which we're going to talk about now in event 7. So event number 7 is confirmation. This is what it all leads up to. This is the entire point of the Wyckoff schematics. This is the entire point of his theory, and this is the part that he himself traded. So the breakout is only potential. As you've seen, especially in crypto, there can be many, many breakouts that look really good and then they fail. So what matters is the confirmation. Here it's important to remember that if you're correct, the next trend will be significant and offer plenty of great trading opportunities. Think about what you're witnessing if you are right. If you just wait for confirmation, you're not just catching the first trade, you're also catching a new extended up or down trend, especially if we had a lengthy accumulation or distribution. So if you have gone through all this and say it's taken many weeks on a daily chart and you actually get valid confirmation, it's not just going to stop after one move. You're going to get a significant uptrend or downtrend. So it's important that you wait for your proper confirmation. Don't jump the gun at event 6. Even if you're a higher time frame trader, going in too heavy on the breakout is still breakout trading. And if you don't do breakout trading right, you just bleed money. So what do we need to see? Well, we need to see the show of strength or the show of weakness get tested for confirmation. This is the last chance to shake people out, and it can get violent. So you need to be patient and wait for it, because it's going to try and take out those early breakout traders. By this point, the market generally knows the trend has shifted and we're now moving in a new direction. But a lot of people will try and get on that trend early. So you get the worst wicks, fake outs, chop, craziness. You get the craziest price action here of anywhere, because it is a classic shakeout trying to get you to give up before the real trend. So in a bullish accumulation, if you see on the screen, SOS means show of strength. It's also called jump the creek. A creek is like a river. And the analogy, I guess, is that once you jump over the creek, there's no going back, right? Whatever you want to use, this is just the word that Wyckoff used. But show of strength is a very common one, where you show strength by breaking out, or jump the creek by jumping over the area of resistance. And then the backup, which is the BU, or back up to the edge of the creek, BUEC, is what you call the retest. These are just the terms that Wyckoff used. Please do not get hung up on them. You can use anything you want. If you just want to use breakout and retest, absolutely fine. Show of strength and backup, whatever you want to use. Don't worry. So, on the bearish side, on the distribution as you see, you have a show of weakness, and you have a LPSY, which is the last point of supply, right? That's what the words mean. That's what the acronyms mean. Again, you can use breakout, retest, whatever you want to use. And what you want to see at this point is an impulsive breakout with a corrective retest, right? So this is how we can know for sure it's a valid breakout after we get multiple of these confirmations. Nothing is ever 100%. So yes, you will be wrong sometimes, but we're not here to be right every time. We're here to be right more times than we're wrong with good risk management and make money. So you want to see a breakout with impulse. You remember this from the other lessons. The impulse means the strong move, lots of up candles or lots of down candles with no pullback. That's an impulse. And then you want to see the impulse break through the range. And then you want the retest, whether that be the backup to the edge of the creek or the retest of the last point of supply. You want to see that be a corrective move, meaning it's more sideways down or sideways up, less impulsive, and with lower volume. So volume supporting them is also important. You obviously want to see higher volume on your breakout than you do on your retest. That's pretty common, and that's a simple heuristic to use. And another key feature of a valid breakout and confirmation is if the range high or range low gets front ran. So if price does not re-enter the range, that is a very strong sign. In an ideal world, like on these schematics, the dashed blue line is the range high. So in an ideal world, you do get a little retest of it, and it holds nicely, and then it goes in the continuation. Or you get a retest of your resistance and it holds nicely and you continue. But of course, the markets aren't perfect. Sometimes it will not even reach back to there and it will continue. Don't see that as a trap or whatever. That's just a sign of genuine strength in the new trend. All right. So what do we do? How do we actually trade this? This is the important part. This is where Wyckoff traded. This is exactly how he traded it. So you can start with this as a frame. And from there, you can enter your own trading rules if you want. So you enter on the show of strength or show of weakness after the retest, and you put your stop loss below or above the BUEC or the LPSY. So let me explain that. In accumulation, you wait for the breakout that we see here. You wait for the retest, and then you wait for the further show of strength, which is the breakout of the breakout. Make sense? This is why you don't buy this breakout. You buy this one, and you put your stop below the retest consolidation. Okay, that's for bullish. Distribution. You do not buy the first breakout on the downside. You wait for the retests, and then you sell whenever it breaks below the show of weakness level with your stop above the last point of supply, so that you have the highest probability of catching the next trend, because for it to then reverse after making a new low or a new high, for it then to reverse all the way back down to your stop would completely invalidate the entire schematic. That is your highest probability entry because you have 7 events, 5 phases of Wyckoff action, all supporting you, and then you execute your trade. That's why he did it. That's the best way to do it. And that is the Wyckoff theory events section covered all the way through the confirmation.